Yes. Kushal ji, start.
Kushal sir,
Okay, sir.
please start.
Good evening, everyone. I am CA Kushal Khandelwal, moderator of this webinar. We are delighted to welcome all in the webinar being organized by Continuing Professional Education Committee of ICAI. It is my pleasure to be a moderator for this webinar on foreign trade policy and preparation of financial project financials. In a short while, we will start this webinar. First, I would like to appraise you about the CPE committee. The profession of chartered accountancy is growing leap and bounds, and its phenomenal growth has brought the profession at the forefront. Today, our profession has acquired an indispensable position in business and economy. ICI continuously aims at developing this objective, the developing uh, developing knowledge edge so that the members stand out to expectation of the society. To achieve this objective, CP Committee of ICI has been continuously striving for perfection, integrity, and knowledge, while which make the word chartered accountant synonymous with excellence in service. In this direction, CP Committee has always been proactive to the emerging needs of its member, enabling them to acquire contemporary knowledge and skills to face the challenges effectively by organizing CP programs and providing adequate opportunities. The program for this evening is as follows. We have two sessions of 1 hour each, and topics are foreign trade policy, an overview and specifics, and second, step-by-step guide in preparation of project financials. Our eminent speakers will talk about above mentioned two emerging areas of professional interest. So I take the privilege to introduce our speaker, to introduce our chairman of CP committee, CA Purushottam Khandelwal sir. He is a chairman of CP committee and convener of RBI Directorate of ICI. He is having 25 years post-qualification experience in the field of audit, direct and indirect tax, and intellectual property rights. This year, he is devoted to fortifying CP framework and guaranteeing quality across its entire operational spectrum. And this year, major focus would be on upgrading of CP portal for enhancement of branding and professional competency of members. So may I kindly invite CA Purushottam Khandelwal sir to deliver welcome address. We would be greatly honored if you could grace us with your words, sir.
Good afternoon, respected faculty for this webinar. Shashank Gupta ji, Shiv Bhagwan Asawa ji from Navi Mumbai, moderator of this programs and vice chairman of the Sangli branch, Kushal Khandelwal ji, secretary of CP committee, Ajit Nath ji Tiwari, and respected members, those who are live watching the webinars. My committee, that is CP committee, is a committee of all, mother committee of all the committee. Our intention to upgrade the knowledge of members throughout the year, because what we are selling our services. So we have to update any times. The knowledge which I gain today may be irrelevant for tomorrow. So it's a continuous process. We have dispensed away with the 3-year rolling period of CPE, because what we are providing consultancy today and we will update ourselves after 2 years, it's totally irrelevant. So the previously we was follow the England and Wales. So there was a programs for 3 continuous, 3 rolling year period in the UK and Wales. But after changing by ICI, our institute, then they follow the England and Wales. So first time they follow us, that ICI is doing a wonderful job. This year, you rightly said, Kushal bhai, our entirely focus on the upgrade of the portal of CPE committee. We are coming with a new dashboard where all 175 branch can register their programs, and the members can pay from the single window, and they can register with their choice program. When if they want the income tax, audit, accounting standards, capital market, financial market, so they can choose their own program from the website. We are honoring coming with the attendance mark of the CPE programs. We will display one code in the auditoriums where and link will be sent to the respected members, those who are attending the programs, and they will click the link and put this code number. So automatical real-time CP update will be available to the member. It doesn't mean that we are not relying on you. We are 100% relying on the member, but the sake of convenience and using the technology, we don't want to a human intervention. This year, we have also started the sending mail to every member at the end of month that how much CPO is completed, how much you have to pending. So you may be aware that you have to do the programs. We have another changes that we have issued the CP guidance in under the new section of the Chartered Accountant Act, where the member has to compulsory complete with the CPA program. If they are not complying with the CPA requirement, so there will be consequential action can be taken. So my humble and folded and request to all the member, please update your knowledge and attend the program regularly. This year, ICI is celebrating a 75th year of inception, and we have taken so many initiatives for the members and students. Last year, I was the vice chairman of member in practice, where we had given a software cost of rupees 20,000 free of cost to all the members. Please, member can visit the cmpbenefit.com and use the software for their office purpose. It will be help to members to best utilization of resources at their end. So I will not take much of time because Shashank Gupta ji here, they will apprise about the foreign policy because the government engine changed yesterday. There is a huge possibility to change the policy also. It will take 2 or 3 times to take a stable government. So still, whatever the policy are in existence, you can better explain to the member. Thank you so much. Yes.
Thank you, Khandelwal ji.
Yes.
Thank you so much,
Sir
sir.
Bhagwan ji,
Haji.
thank you so much. Yes,
Yes,
please.
yes. Thank you.
Okay, thank you so much, sir, for your kind words. We are now commencing our session, and I am delighted to have all of you here with us. Let us begin our journey of learning and discovery together. Our first session, Foreign Trade Policy and Overview and Specific by C.A. Shashank Gupta, sir. So I take the privilege to introduce you, sir. He has more than 10 years of experience in taxation. He has worked on multiple international projects on VAT, indirect tax like Malaysian VAT, Bhutan VAT, etc. He has also delivered more than 300 sessions on trade and industry pan-India on GST. So now by a request, C.A. Shashank Gupta, sir, to take charge of the session.
Thank you, Kushalji, for the kind introduction. Chairman of the CPE committee, Purushottam Khandelwal sir, Shri Bhagwan Asawa sir, Secretary of the committee, Ajitnath Tiwari ji, and respected seniors and my dear friends in the audience. It is an honor and a pleasure to be here today to shoulder the responsibility of continued learning, as is the objective of our CPE committee. The responsibility which I've been given today is to discuss and deliberate upon the foreign trade policy. And foreign trade policy, friends, as the name suggests, foreign trade policy is actually the policy set by the government of India as to how the foreign trade would be governed between India and other countries. So foreign trade policy actually envisages, covers both imports and exports, where by default, we can understand, if we were to simplistically understand what is the purpose of foreign trade policy, it is simply to felicitate exports, that how can we make the exports grow more and more? And why does the government want exports to grow more and more? So that more and more of forex comes into India and India becomes a developed nation. And at the same time, restrict imports or completely ban certain kinds of imports. So this All of this is taken care through the foreign trade policy. And to better understand what is foreign trade policy, we've prepared a presentation to also. Now, when I say foreign trade policy, the governing law, so whenever anyone refers that we are all of us, we refer that we are a chartered accountant. So we are governed by the institute by a separate act of the parliament. Similarly, for foreign trade policy, also there is a separate act known by the name of Foreign Trade Development and Regulation Act, which was established in the year 1992. The department which governs the foreign trade policy is known by the name of Directorate General of Foreign Trade. So, in short, it is also known as DGFT. And the head office of this DGFT is in Delhi in Udyog Bhavan, Ministry of Commerce. It is governed through Ministry of Commerce. And DGFT also has various regional offices across India, and the head office being situated at Udyog Bhavan, New Delhi. The basic document basis which any entity is registered to avail the benefits as granted by the foreign trade policy, that registration is known as Importer Exporter Code, or IEC. It is a specific registration given to any entity which intends to undertake any exports out of India or imports into India. Friends, the basic policy or the basic fundamental which is globally applicable, every country has a fundamental principle which says export the goods and or services, but not the taxes. Export the goods and or services, but not the taxes. What does this mean? This means that I am a professional based in India. If I have to buy this calculator, the price of the calculator will be 500 rupees plus applicable GST. But at the same time, if I were to export this calculator out of India, government would say no need to pay tax, or if you have paid tax, claim a refund from us, no requirement to pay any tax. And hence, same calculator manufactured in India, if the user is in India, I am liable to pay tax, but the same calculator exported out of India, earning Forex, not liable to pay tax. And when I say tax, I mean indirect tax. So export the goods, not the taxes. Why is this required? This is required because I have a customer in USA who wants to buy thousands of such calculators. And thousands of such calculators, if he wants to buy, I submit my quote, then there is another person from China who's submitting his quote. Now, because there is global competition, and global competition includes pricing, includes technology, includes quality. So government said, we can't be taking care of your quality, your service levels. But what we can do is at the cost level, we'll make sure that we will take away any tax burden which is there in the product chain, in the entire manufacturing chain on the said product, so that you are able to sell the product at least without any tax cost. Then a very important aspect of foreign trade policy and why we are discussing it here today, what is the professional opportunity, what is the professional relevance of it, that foreign trade policy provides for duty exemption. And when I say duty exemption, customs duty payable at the time of imports. It says if you comply with this condition, you are not liable to pay any customs duty. Foreign trade policy provides for duty remission. What is remission? It's kind of a refund only. Foreign trade policy provides for custom duty refund, and foreign trade policy also incentivizes exports. Also incentivizes exports. There is certain incentive which is available, but you will notice here that the term incentive has been written in red and it has been striked off. There is a certain meaning to it. We will come to that meaning as we gradually progress in our discussion today. The first duty exemption scheme and foreign trade policy has two parts. Foreign trade policy has two parts. One is the foreign trade policy, which has chapter wise, which is distributed chapter wise, chapter 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And then there is handbook of procedures. Handbook of procedures, which again has chapters, but those handbook of procedures provides for the procedure to be followed in respect of any foreign trade policy relating scheme. So just like in normal law, we have act and we have rules. Similarly, in foreign trade policy, we have the policy and we have the handbook of procedures. The first important scheme under foreign trade policy is provided in chapter 4, which provides for duty exemption remission schemes. And the duty exemption scheme, the first scheme is advance authorization. Advance authorization. Now, duty exemption meaning? Duty exemption meaning that suppose for manufacturing this calculator, I need some material which first I have to import, some raw material are required first, which I have to import. Import meaning that when I'm importing, I'm liable to pay custom duty on that material. Advance authorization scheme is saying, if you are importing any material with the intention that you will make the final product or the finished goods, and those goods would be ultimately exported out of India, in that case, no need to pay custom duty at the time of import. And for that, what you need to do is you need to obtain advance authorization license. Advance authorization license has some conditions wherein once you've obtained advance authorization, you have to complete your imports in a certain predefined period. Then once you have done the imports, you have to clear the final product out of India in a certain specified period, that is generally 18 months. And if you're able to do so, your advance authorization obligation would be completed, and hence the entire transaction would be completed without any customs duty incidents. Similarly, there is another scheme by the name of duty-free import authorization. Duty-free import authorization, and this duty-free import authorization also allows you to undertake duty-free imports in India without paying any customs duty. Without paying any customs duty. Now, a question may arise. What is the difference between advance authorization and duty-free import authorization? The difference between advance authorization and duty-free import authorization is advance authorization is not transferable. So if I have taken an advance license for import of raw material for manufacturing a calculator, and if I am wanting to give that advance authorization to someone else, that now you take this up, you complete the obligation, no, not allowed. Whereas duty-free import authorization is transferable. Duty-free import authorization is available only for products where standard input output norms is available. What is standard input output norms? What is standard input output norms? Government says if you want to manufacture a calculator, for a single calculator, the amount of plastic that needs to be imported should be 100 grams. Should be 100 grams. Why the government is saying so? If the government did not say so, and if I had a malintention, I would say I need 10,000 kgs of plastic for manufacturing one lab calculator. Why would I say so? Because then I would be able to import 10,000 kgs of plastic without any payment of duty. What would I do with so much unduty paid plastic? That's up to me. I have brought into India material without custom duty that is outright 30% cheaper. So to avoid any potential leakages, there is an elaborate list which clearly specifies that for any final product to be manufactured, what proportion of any commodities raw material is required. So DFIA is available only for products where the government has specified that that would be the standard input and output. Now there are also cases where either the SIAN is not available, or if it is available, it does not practically correlate. In such cases, there is an option that a person can approach DGFT, a person can approach customs and request SIAN specific to his product line. So he can seek some deviation in the established SIAN norms. And basis that, advance authorization can be issued, but DFIA cannot be issued. Then in advance authorization, minimum 15% value addition is required. What does that mean? I imported plastic worth 400 rupees for manufacturing a calculator. I sold it in the international market for 500 rupees. What is the proportion of value addition? The proportion of value addition is 100 rupees on 400 worth of material, and then that is 25% in excess. So government says similarly, in advance authorization, whatever you've imported, there should at least be a 15% value addition. Whereas in case of duty-free import authorization, it has to be, value addition has to be at least 20%. How much? 20%. Now, friends, advanced authorization is also available for certain specific sectors, such as spices, but it has certain attached conditions. Similarly, there is also a special advance authorization scheme, which is available for apparel and clothing. Apparel and clothing. But there is no such special DFIA scheme. In continuation to this chapter 4, there is another scheme. So suppose I am the manufacturer of this calculator. I was not aware of the advance authorization scheme. I imported plastic worth 400 rupees and paid the applicable custom duty. Now I'm exporting the calculator out of India. Does that mean that I can do nothing about the custom duty that I must have paid at the time of import? No. I can certainly do something about it. And what can I do? I can claim the duty drawback on the export of such calculator. Now, what is duty drawback? How does it work? When I'm exporting this product, I will file a shipping bill, and on the shipping bill, I will mention that I intend to claim the duty drawback. And basis the classification, the HSN code of my calculator, there is a specified all India rate of drawback. There is a specified all India rate of drawback, a percentage basis which I will be given the drawback. So suppose for calculator, the drawback is 2%. I will apply 2% on the export value of this calculator, and I'll be given the duty drawback for that much amount. So this is duty drawback, which is nothing else but a form of remission of the customs duty paid at the time of import of the inputs. Then comes incentivization within chapter 4, sir. Within chapter 4, there are two schemes which can be argued to either be duty remission schemes, rebate schemes, or the general perception is that these are incentivization schemes. The first scheme is rebate on state and central taxes and levies. Rebate on state and central taxes and levies. What does this mean? This means that this is a specific scheme for the garment sector. For the garment sector, government brought in this specific scheme, basis which for certain embedded taxes such as today the fuel that we use, petrol, diesel, gas, it is covered under excise, covered under VAT. No credit we get of that. Similarly, for transportation, the vehicle that we use, it uses fuel. Again, there is excise duty and VAT. The electricity that we use, there is electricity duty. Then there are stamp duty, which are applicable. So local certain levies are there, which are still non-creditable. And government says that we understand that in any product being manufactured, all of those would go in the manufacturing cost of that item. And to make sure that our product remains competitive in the international market, they brought in with the scheme known as, for the garment sector, for the textile sector, rebate on state and central taxes and levies for the such non-creditable taxes. A percentage was specified that if the product is covered under this HSN, we will give this much of benefit or rebate under ROSCTL scheme. Now, for other than the garment sector, and for all the goods which are being exported, except a few, there was earlier a scheme known as Merchandise Exports Incentivization Scheme. And what did this scheme provide? Merchandise Export Incentivization Scheme provided for incentives for undertaking exports, and the percentage was anywhere between 2 to 5%, depending on the country of export and depending on the product of export. Now, against this scheme, the United States of America, the US government, filed a case against the Indian government in the World Trade Organization, where US won that case, and it was held that such incentivization schemes should be discontinued by India with immediate effect. Because of that judgment, two very important incentivization schemes, MEIS and SEIS, were immediately discontinued, almost immediately discontinued. And as on date, as a replacement for MEIS, the scheme which has been brought in is Scheme for Remission of Duties and Taxes on Exported Products, RoDTEP. But for services, there is absolutely no such scheme today. And what does the RoDTEP scheme provide? The RoDTEP scheme provides, again, nothing else but for remission of embedded taxes, taxes on fuel, taxes on stamp duty, electricity duty, these kinds of taxes which are there. The government has prescribed a nominal percentage on which, basis which remission can be claimed on the exported product by any exporter. Friends, now we move on to chapter number 5. And in chapter number 5, there is another important scheme governed by the foreign trade policy. And the scheme is known by the name of EPCG, Export Promotion Capital Goods. And what does the term Export Promotion Capital Goods mean? Export Promotion Capital Goods scheme is specifically for duty-free import of capital goods. Like advance authorization was there only for duty-free import of inputs, but for manufacturing any world-class product, we need world-class machinery. And that world-class machinery, if I'm importing today from Europe, suppose 10 crore rupees the machine value, and if I have to pay 3 crore custom duty on that, the machine would cost me 13 crore rupees. So realizing this, government said, we'll allow import of capital goods at zero duty, provided you use that machine for manufacturing export products and you undertake export of goods in the stipulated time, meeting the prerequisites. And once you do that, we will waive or we will not request you or require you to deposit any custom duty on such import of capital goods. So EPCG license issued by DGFT, once it is issued, it is valid for 24 months. So suppose on 1st of June 2024, I bought an EPCG license. The license shall remain valid till 1st of June 2026. And what do I need to do by 1st of June 2026? I need to make sure that the capital goods for which such EPCG license has been issued has actually been imported into India. Then thereafter, I have to complete the export obligation, and the export obligation is generally 6 times the duty saved on the import of machinery. So in my example, the value of the machinery was 10 crores. The custom duty payable was 3 crores. The government says you undertake exports 6 times the value of duty saved, that is for 18 crores in 6 years from the date of import, and we would treat that you have completed your EPCG obligation, and we would not require you to pay anything in the name of customs duty payable on import of capital goods. EPCG scheme also covers a service provider who is certified as a common service provider by the DGFT. What is this common service provider? Friends, recently in 2023, a new foreign trade policy was introduced wherein government recognized the potential of certain specific districts, certain specific identified areas which are very, very prominent in exports. I'm not sure if you've heard about a town called Muradabad in UP. It is also known as Pital Nagari because the entire city has a lot of units dealing in brass products, and they develop very beautiful, very exquisite pieces out of brass, and all of those are exported across the globe. So for these towns, because there are small exporters also, big exporters also, big exporters have access to all the means and materials, but small exporters generally can't afford to spend too much on technology, to spend too much on developing their infra. And hence, in the foreign trade policy, government introduced the concept of common service provider, where the common service provider can set up a common center for all the exporters in that area who can use the premises, who can use the facility of this common service provider, and basis that facility, in this facility, a lot of advanced machines, a lot of advanced technology can be housed in, and all of that can be leveraged by the small exporters. The government aims to subsidize, incentivize these common service providers, and hence they have been recognized here also in the foreign trade policy. Actual user condition: imported capital goods shall be subject to actual user condition. Actual user condition meaning that if I have taken the EPCG license, if I have imported the machinery, then only I must use that machinery, and it should not be used by anyone else. So there is an actual user condition. If I have taken the EPCG license, I have to import the machinery, I have to use it, and I have to produce the goods which will be exported out of India. So that is the actual user condition. Friends, then we move on to chapter number 6. In the chapter number 6, Chapter number 6 specifically deals with certain important schemes of the foreign trade policy, which includes export-oriented units, electronics hardware technology parks, software technology parks, and biotechnology parks. As the name suggests, electronic hardware technology park, software technology park, and biotechnology park are dedicated parks for undertaking hardware related activity, software related activity, biotechnology related activity, wherein a certain unit would be undertaking operations within that domain. So suppose it's a software technology park, a unit is set up as STP, they undertake, develop all the software, and that software is ultimately getting exported out of India. So they can take the benefit under software technology park. And a more generic term to this is export-oriented unit. Export-oriented unit meaning there is a unit which does a lot of exports but may do some domestic clearances or domestic sales also. A unit which does a lot of exports but does some amount of domestic clearances also. And those benefits can get an EOU status, and basis the EOU status, they are entitled to avail certain distinguished benefits, which with the implementation have come down significantly. But let me tell you, prior to GST, the export-oriented units had much more benefits than as compared to the present GST regime. Friends, then in chapter 7, there is a concept recognized by the name of deemed exports. Deemed exports, that is, not actual exports, but which has been deemed to be equivalent to exports. And what are those? Supply of goods against advance authorization. That is, one, I told you a case, I am manufacturing this calculator, I import some material. Now, while I may be importing some material, at the same time, I may be requiring some material here locally. Now, when that gentleman, the domestic supplier, is supplying the goods to me, is he undertaking exports? No. But what does it say here? That if there is a supply of goods against advance authorization, so if I am taking a material, importing also, taking some material from here person also, under advance authorization, for that domestic supplier, it becomes deemed exports. It becomes deemed exports. Same is the concept of supply of goods to export-oriented unit, software technology park, electronic hardware technology park, or a biotechnology park. Supply of capital goods against an EPCG authorization. Government says, if I am giving the tax duty benefit when you are importing any product, and similarly there is a person domestically who has the capacity to develop world-class machinery, why should I not allow him the benefit of deemed exports? So all of these, if I am either I'm procuring internationally, importing, I am entitled to claim benefit under the separate scheme. If I am importing these locally, if I am procuring these locally also, then also the supplier is entitled to claim the benefit of deemed export. And deemed export is provided in Chapter 7 of Foreign Trade Policy, but it is also recognized in GST. And where is it recognized in GST? In section 147 of CGST and SGST. certain new insertions were recently made in Foreign Trade Policy 2023, where e-commerce and courier exports were duly recognized. Friends, we all know that today majority of our procurements are happening online. We simply go to Amazon, order something, and it comes at our doorstep. Locally, we have to buy, order food. We do Swiggy, Zomato. We have to get anything instantly. We Blinkit or Zepto. I'm not advertising any of these, sir. Not at all, sir. But I'm telling you, just sharing that while domestically life has become very easy, internationally it is also happening. Amazon today lists suppliers from India who can, from India, supply goods to the US and to the international markets. Now, historically, we have dealt with exporters who would book a whole container and export the goods in bulk. But should we not recognize these exporters who are undertaking exports in limited quality, nominal value? Should we not recognize those? We need to recognize those, and hence, to recognize those, the government has brought in the concept of promoting cross-border trade and digital economy, wherein e-commerce export of goods and or services has been duly recognized, provided the payment should be through international credit or debit card or through authorized economic payment channels as may be specified by the RBI. Friends, one thing I would like to share, one very, very important aspect is that while foreign trade policy is giving incentives, benefits, a lot of it is attached to actual realization of the foreign exchange currency. And for realization of foreign exchange currency, the governing parameters are given by the RBI. Okay. Similarly, the foreign trade policy recognized e-commerce platform. It even recognized their delivery partner, the e-commerce export logistics provider, and it also recognized export through courier service or post. So these have also been recognized, and our upper limit has been fixed on export through courier or post, where the value should not exceed 10 lakh rupees per consignment. E-commerce export hubs. What is e-commerce export hubs? Just like specialized warehouses, cold chain warehouses, government intends to come up with specific export hubs which would facilitate e-commerce exports out of India. And these hubs would provide for storage, including cold storage, packing, labeling, certification, and testing and other common facilities for the purposes of export. So there is an identified area where I can take my product, I can take my set of calculators, I can do all the branding, labeling there, I can do all the packaging there. The export hubs shall also provide for dedicated logistics infrastructure. All goods, including SCOMET. What is SCOMET? What is SCOMET, my dear friends? Special chemicals, organisms, materials, equipment, and technologies. So these are all sensitive items. Sensitive items which the government either does not want people to trade in, or if at all they were to trade in it, the government says we will only allow provided you obtain a pre-permission from us. So all goods can be dealt in the export hub, including SCOMET and restricted good. provided there is a permission for this and the goods are not prohibited. Then capital goods can be put in here in export hubs, but they shall be used for packaging, labeling, certification, testing, and other common facilities. So it can be a common center for all the exporters from that area to go to and undertake and avail services such as packaging, labeling, certification, testing, and other common facilities. So SCOMIT, as we have discussed, India is a signatory to international conventions which obligates regulated exports and special chemicals, organisms, materials, equipment, and technologies are generally either prohibited or permitted under an authorization. This you have to apply to the government if you want to deal into anything. You have to put up your representation, you have to discuss that. Government will consider, and if they find it worthy and risk-free or acceptable risk, then they would give you the permission to deal in those products. Otherwise, generally, SCOMIT products are restricted, and these are generally issued by the headquarters of DGFT, which are based out of Delhi. So this, friends, brings me to the conclusion of my deliberation for today. In case if there are any queries relating to my session today, I would be more than happy to take those up. I'm here with all of you and we have some time in hand. So any queries from the audience, I'm more than happy to take those up, please.
Hello, sir. So we have few questions, sir. Is it mandatory to fulfill export obligation only out of production from imported capital goods that is procured under EPCG, that is nexus between import and export? Is it required?
So there are two parts to your question to answer this question. First of all, a very huge issue came under advance authorization. See, advance authorization has a condition known as pre-import. Pre-import meaning that you cannot export the goods before you have imported them. So meaning thereby, while one-to-one correlation may not be possible, but the intention of the government is that if you're obtaining advance license, first you have to at least import the goods and thereafter subsequently export the goods. So you might be having certain finished goods ready on the date of import. You import the goods, raw material, you have certain ready finished product. Post the date of import, you undertake exports. One-to-one correlation is not necessary, but take care of this aspect. Similarly, for capital goods, see, capital goods, when you're filing for the EPCG license, sir, you are giving an undertaking to the government that I'm going to undertake this machinery, and from this machinery, I'm going to manufacture this product. You have to give the HSN. It is approved. As long as your product is matching that HSN and as long as you are able to undertake the 6 times worth of export within that specified period, that would suffice. And as long as the machinery is fitted in your factory, that would suffice. And one-to-one correlation is not the intention. The intention is that there should be no defrauding and their actual user condition should be complied.
Okay, sir. Thank you, sir. Next question, sir. My export customer based in Japan is giving me, that is based in India, sales order, but asking me to ship goods to Indian party, SEZ based in India, who in turn will further process those goods and then ship the same to Japan. Is it possible under foreign trade policy?
So, see, this is a slightly technical transaction. What I understood, and please correct me if I've not understood it completely. I understand that you have a customer based out of Japan who is saying that on my direction, you supply the goods to my counterpart who is sitting in India in an SEZ area. then that counterpart in SEZ area will undertake some changes, modifications, and subsequently it will be cleared to Japan.
Sure, right, sir.
So first of all, supplying to SEZ in itself is treated as supplies outbound. So, and at the time of clearing the goods to an SEZ, a proper documentation would be done, and SEZ is legally treated as an area outside India. Goods supplied to SEZ are treated as goods supplied outside India, and you're eligible to claim export incentives in that. We have the Vice Chairman Committee, GC Mishra ji with us. Welcome, sir.
Thank you, Sasangji. How are
Welcome,
you,
sir.
sir? Thank you, Jigmu.
Hello, sir.
Hello, Kushalji. How are you?
Fine, sir. Our
Great.
Vice Chairman of CP Committee, CA Gyanchandra Mishra, sir, have joined us. Welcome, sir, to today's webinar. I take the privilege to introduce our Vice Chairman of CP Committee, CA Gyanchandra Mishra ji.
Kushalji will request you to not please introduce because we have very less time.
Okay, sir.
So
Sir,
since the program is continuing, I will take few moments
Yes, sir.
to interact with the members. Two very
Yes.
respected speakers of today's program, Shashank ji and Shiv Bhagwan ji, moderator Kushal ji, secretary of the committee Ajit Nath Tiwari ji, and his entire team, and all respected participants. Good evening to one and all. Friends, sorry, in between of the program I have joined, but for last few sessions I could not join. So today I thought to take 1-2 minutes to interact with the members who have joined this program. So as all the participants might be knowing that on every Wednesday, 4 p.m. to 6 p.m., the CPE committee is organizing 2 hours program, 1 hour for one speaker. So effectively 2 speakers. And all the programs and all the topics which are very unique and on which the members need quick references that are being taken. And on this Wednesday, I mean today, Shashank Gupta ji, a very learned professional and expert in GST and foreign trade policy, he is deliberating today on foreign trade policy. And the other one, Shiv Bhagwan ji, shall be deliberating on again very important topic, that is preparation of the projected financial statements. So friends, hope that you people are enjoying the session, and the time and dynamics of the profession are changing very fast. There is need to upgrade ourselves with the new skills and new areas. Newer areas is very much required because until unless we explore some newer areas, probably the compliance part of the practice is going to reduce in coming time. So taking in view all these aspects, today's both sessions are very important. And not only these 2 sessions, we can witness that in coming time, the artificial intelligence is going to one of the very vital and key area, which will certainly change the shape of the practice in coming time. So we have to make ourselves abreast with the technology also, and we have to understand which technology will impact in what way to the profession and what could be the newer areas where we could explore in coming time. So friends, without taking much time, I am thankful to both the speakers for their gracious presence in today's program, and of course to the moderator. And I compliment to Ajit Nath Tiwari ji, who continuously take this program ahead on a weekly basis. So friends, enjoy the session. keep yourself motivated and keep the profession's flag flying high forever. Thank you very much for patient listening.
Thank you so much, sir, for your kind words, sir. Thank you.
Thank you.
Shashank, sir, we have a last question.
Yes.
Recently, QCO compliance has been made mandatory for exports under advance authorization. We already have some advance authorization in hand. Can we get QCO exemption on such advance authorization and export goods as per earlier practice without following the requirements under notification 71/2023?
So see, QCO authorization is a procedural part which has to do with your quality controls. And I think rather than looking for getting an exemption for that, you should also bounce this off with your CHA, because they are the ones who will be on ground undertaking your documentation and clearance of the concerned item with that. Now, there is also, practically speaking, there is also generally a gap between what is the strict legal interpretation and what is the understanding of the ground formation. Well, strictly legally speaking, you may be entitled to the exemption, but at the ground, maybe you filed your shipping bill without the QCO and then your consignment gets stuck there. Then it's a very, very difficult situation to be in, because you're looking at demurrage charges, interest, penalties, and a lot of other difficulties. So I think you should bounce this off and discuss this with your CHA, specifically for the concerned port or the ICD through where you are going to undertake your subsequent transactions. And basis the feedback received, you should accordingly please take the position on that.
So we are done with all the questions, sir. So on behalf of CP Committee of ICAI, I extend a heartfelt gratitude to CA Shashank Gupta, sir, for gracing us with his wisdom and insight today relating to the foreign trade policy. He very well explained us chapter-wise and in a very slow tone. Thank you so much, sir. Thank you. Thank you once again, sir.
Thank you, sir. Thank you. Thank you all for the pen. Thank you.
Moving forward to our next session on step-by-step guide in preparation of project financials by CA Shiv Bhagwan Asawa, sir. So I take the privilege to introduce sir. He has more than 29 years of experience in the area of project appraisal, financial consultancy, raising of funds through debt and equity. He has been a keen analyst with exceptional negotiation and relationship management skills and abilities in liaising with bank, financial institution, regulatory authorities, and also he was the chairman of Thane branch in the year 21-22. So I welcome sir to today's seminar.
Thank you, Kusal.
And now I request sir to please take charge of the session.
Let me first share my screen. Kusal, my screen is visible. My screen is visible or not? Okay, let me put 2-3 more on the screen. Now one Word file is there, and okay, now one Excel file is there. Oh. Now I think my PPT is visible. Am I right? Now it is full screen. Before I start, let me thank CP Committee of ICAI, Chairman Purushottamji Khandelwal, Vice Chairman Mishra ji, and today's moderator Kushal Khandelwal ji. I had fortunate to visit his branch also some time back, and it was nice interaction. We have limited time, so we need to go little faster way. But anyway, I am available either on WhatsApp or LinkedIn platform. You can raise any question if we don't able to clear on time this time. And whatever help for the fraternity, I am always ready. And thank you, Sasan Bhai, for your nice deliberation on foreign trade. And let me start. Before I start, let me have one standard disclaimer. See, whatever opinion I am expressing, and if you are adhering to my advice, my request, and if you are incurring any losses, then I am not responsible. Neither moderator or CP committee is responsible. So before adhering to my advice, you must do your own due diligence. Then I was reading one article, very senior chartered accountant from Mumbai, Vijay sir. He was saying whatever thought process recently, just now expressed by Vice Chairman Mr. Ji, he conventional practice, days of conventional practice are almost uh, slowly, I can say shrinking. So you need to have upgrade your knowledge. You need to specialize in something. You need to have newer segment of practice to add on. And one of them could be my session, how to prepare project financials. Once you learn this, how to prepare project financials, then there are many opportunities in financial domain opens for you. You have to, before I start my session on uh, how to prepare project financials, I want to deliberate 5-10 minutes on something else. First of all, see the way we need to look our CA practice. My vision is that you should look your CA practice like, say, investable enterprise where you can invite staff to invest in business. I know that only chartered accountant can participate in your uh, business or they can become partner. But look at a different dimension. If you assume that your CA practice is an investable business and you want to invite staff to invest, then what are those options? These are the three buzzwords SARC will look into. One is mm, moat. See, today's the typical conventional practice which you are doing, probably you are competing with non-CA or maybe sometimes with accountant also, tax practitioner, accountant. Now you will see flurry of advertisement like online filing of return at 199 or 299. They have reduced this typical conventional practice becomes so competitive that you don't have any uh, moat with you to become successful in conventional practice. Then second important address is total addressable market, which I call TAM. See, today's conventional practice, agency tax audit from 2 crores, limit has increased to 10 crore, bank audit, it becomes almost one third, then GST audit already gone. Probably going forward, there are many other things which will go away from typical conventional practice domain. If I am hearing correctly, probably uh, in next 1-2 year, income tax department will send salary return pre-filled with SSCs and they will ask to either accept it or in case of any uh, rectification, they may have to raise a rectification bill. Basically, they are sending you the return. If you accept it, that's fine. Probably going forward, salaried people may not require most of the time any CA help to comply with their filing requirement. So, see, your total addressable market is slowly shrinking in typical conventional practice. And third is margin. Problem with margin is that our overhead is increasing every year. There are dearth of article sheet, particularly for small, medium-sized firm, where getting article is very difficult nowadays. Even I don't, with due respect. Uh, these all big firms nowadays they have started recruiting even first, second, third attempt CA inter candidate in their fold as article. Obviously, for CA students, they have their preferences. Most of the time, their preferences to join bigger firms rather than small, medium size firm like us. So obviously, you are dependent on paid staff, and in paid staff category scenario, you need to give good amount of hike in first 2 3 years to retain them. And the way the margins, the overheads are increasing, and in proportion to that, your billing or revenue is not increasing. Obviously, there is a pressure on margin. So you need to think in alternate way. You need to start exploring some new areas of practice where you can develop more. You obviously, if you are going into new areas, then your total addressable market is increasing. And if you are going to new areas, there is a additional revenue, like what we have learned in our CA course, marginal costing that comes into play, then overall margin get also increased. So I am giving you 5 minutes of mine in for you to think and look your CA practice, current CA practice domain in these three buzzwords, around these three buzzwords. Now, before I start, another 2 3 minutes. See, majority of us are into typical conventional practice where we are doing audit, direct tax, indirect tax, accounting, and all those things. And most of these options are created due to mandatory laws. And obviously, real monetary value is not created through this kind of services which we offer to our clients. The clients is not really monetarily they are benefited out of this kind of practice. Most of the time, you are appearing on the expense side or on the debit side of your client's books of account. Basically, you are linked with either debit side or outflow based practice. Then other areas of practice, I have segmented this is called credit side practice or inflow based practice, where you are raising fund, where you are through IPO, through bank finance, you are helping your clients to receive government grants, subsidies, you are helping your client to do their treasury management, you are helping their client to stock up a long tax refund, you are helping your client to renew their bank loan, whatever say working capital limits, then everywhere you have to submit CMA data and do their bank loan. Then you are helping your client in merger and acquisition. Obviously, today's session again, project report, CMA data preparation. These are basically linked with inflow in your client's books of account. And third, which I called is practice of fear. If you are into conventional practice, then probably you need to upgrade yourself. Probably you have to need to handle litigation or maybe sometime income tax, GST raid, fraud detection, enterprise risk management, cyber security management, and obviously current buzzword is PMLA and Benami Property Act. You know, those who are stuck in PMLA laws, what kind of suffering they have. I don't want to mention some big names, but you also aware of what happens in. These are basically tough laws, and people fear these kind of things. See, आपके क्लाइंट के प्लेस में अगर इनकम टैक्स का रेट आ गया या जीएसटी का रेट आ गया या जीएसटी ऑडिट टीम भी आ गई, तो you know one thing, client will call you immediately for your. This I call practice of fear. वो एक माउंटेन ड्यू का एडवर्टाइजमेंट था ना कि भाई डर के आगे जीत है, तो मैं तो बोलता हूँ इस काइंड ऑफ प्रैक्टिस, डर के आगे पैसा है, अच्छा पैसा मिलता है, आपके वरी फ्री रहता है प्रैक्टिस. सेकंड, देयर इज नो ड्यू डेट काइंड ऑफ थिंग्स which affects your routine daily life. Otherwise, say if you are into typical income tax, GST and all those things, then you have problem with your due date. 7 तारीख को TDS जाना है, 10 तारीख को R1 जाना है, 20 तारीख को और जाना है, then quarter end के report जाने हैं. All those due dates will play in your mind, and you have to be there, physically present, sometimes mentally present in your office to comply with various requirements of statutory law. And in this kind of practice where you are doing advisory or you are handling such seizure cases or raid cases, probably you are giving services, consultancy services, and clients need it desperately. Or else, if you cannot do, then there is a best practice to become an entrepreneur. Recently, I was couple of months back, I was watching Shark Tank. One young chartered accountant couple came to present their business. Obviously, all stars have invested, four stars invested in their business. And at a young age of 26, 27, they created valuation of their company to 30 crores. So it's a huge amount at this young age. Basically, I want to say these are the 5 questions you need to ask yourself while entering into any practice domain. Are you solving or addressing problem statement? Are you helping your client to generate income? Are you helping to bring inflow of funds? Are you filling the gap? Filling the gap in the sense there are small companies who cannot afford full-time CFO. I am giving one example. You probably can give CFO services kind of thing, and that's I called you are filling the gap. Or are you helping to create wealth? Suppose there are cash-rich client of yours, and most of them parking their extra fund to maybe liquid fund or maybe bank FD. If you can help to channelize their resources into more yielding returns with proper due diligence, and if you help them to get more returns, so if one side you are generating excess income for your client, and second you are helping them to create wealth. Certain new avenues today I will not discuss, but these are the concepts you one can think about. One called fire consultancy, means financial independence and retire early. Nowadays, myself is mostly into it. I am helping youngster certain times, people, senior citizens to retire from their active life, and youngster to plan their future retirement. Even youngster at the age of 25, 27 coming to me, and they are saying they want to retire by 45 or 50 and plan their retirement in such a nice way that they can follow passion post retirement. Suppose someone is very passionate about agriculture, he wants to be an agriculturist at the age of 50, but at this age he is 25 or 27, he need to plan कि भाई जब एग्रीकल्चर में हम घुसेंगे तो ऐसा नहीं हो कि मेरा घर बार नहीं चलता। इस तरह का रिटायरमेंट प्लान बनाए कि आई कैन पीसफुली एंटर और फॉलो माय own passion. Then there are equity research. I know a couple of chartered accountants who are helping startup and small companies to prepare their presentation and putting before, say, venture capitalist or angel investor or sometime private equity firm, or helping them to appear in various Shark Tank related programs. Then there is economic viability that I will explain. There's a project appraisal that will explain post my preparation of project financials, step-by-step guide in preparation of project financials. That I already explained. Fire consultancy is financial independence and retirement. So short form is FIRE. Now, see, let me come to my main topic, which is step-by-step guide in preparation of project financials. Step 1 is you are need to prepare 3 tables. One is cost of project, second one is means of finance, third one is contingency. And while preparing these 3 tables, one thing you need to skip for time being, that is called except margin money for working capital. To complete the cost of project table, except margin money for working capital, means of finance and contingency. So I have prepared one dummy data. Based on that, I will prepare live project financial in front of you so that you also understand. And this entire 25, 30 or 40 odd pages of project financials can be prepared within 30 minutes of your time. If you devote 30 minutes, probably if you have ready data, you can prepare this project financial and you can charge your client good amount of fees starting from 15,000 to anything. It may be 25 or 50,000. But only request of mine is that if you prepare within half an hour or 45 minutes and instantly if you give your client, then probably your expectation is too high. Client does not value your expertise. They look most of the time they will look how much time you have taken to prepare this project financial, and if they come to know that you have done it within 30 or 40 minutes, and then if you are expecting 20-25,000, probably client will not pay. तो यहाँ आपने को थोड़ा स्मार्टली काम करना है, इंस्टेड ऑफ 30-40 मिनट में देने के बजाय क्लाइंट को कम से कम 24 या 48 घंटे बाद दीजिए, 2 डेज, एक 2 दिन का गैप में दीजिए। भले ही आपके ऑफिस में आधे घंटे में बन गया हो, 45 मिनट में बन गया हो, बट don't give it to your client within 30 or 40 minutes. Give it after say 24 hours or 48 hours. So that you can explain, see, because your expertise in this field, you can prepare it. So you have to create value for your expertise. So that's why I suggest generally in my office, I don't give any project report or project financial in 30 minutes or same day. I also ask my client to visit maybe tomorrow or day after tomorrow to get their project financials ready. The project report which I will be preparing will be dynamic, will be multi-purpose. You can do multiple changes and everything will get automatically changed. I will show you on live this time. And my Excel sheet is so dynamic कि कहीं भी कुछ भी आप change करें automatically सब कुछ change हो जाएगा, balance sheet tally हो जाएगा. That we will explain while preparing live project report with dummy data. Let's see what is my dummy data. I have asked for coincidentally or coincidentally, it is promoter of the company's surname, but the promoter's surname is matching with today's moderator. And even if it is coincidence or intentionally I have put the name, but we need to appreciate time given by moderator. They are giving selfless services. We must applaud their services for which they are devoting time to participating in this kind of session and helping fellow chartered accountants to upgrade knowledge. तो यहाँ जो खंडेलवाल जी ने हमको डेटा दिया है, ये दिया है प्रोजेक्ट कॉस्ट दिया है उन्होंने लैंड एंड साइट डेवलपमेंट 5 करोड़, बिल्डिंग सिविल वर्क 12 करोड़, प्लांट एंड मशीनरी 15 करोड़, मिसलेनियस फिक्स 2 करोड़, प्री ऑपरेटिव 1.5 एंड कंटिजेंसी विल बी 5% ऑफ प्रोजेक्ट कॉस्ट. उन्होंने मीन्स ऑफ फाइनेंस में ये बोला है प्लांट एंड मशीनरी मिसलेनियस फिक्स एसेट का 75% बैंक लोन लेंगे और लैंड एंड बिल्डिंग का 60% लेंगे and 24 equal quarterly installment post 1 year of moratorium. And second उन्होंने बोला है कि 7 करोड़ रुपया हम apart from term loan, promoters contribution will come by your share capital and unsecured loan, which I call quasi equity of 7 crores. Why this is important, I will explain while preparing this project financial. So based on this data, we can prepare project financials. See, लैंड ऑफ साइट डेवलपमेंट 4 है, यहाँ 5 कर देता हूँ. बिल्डिंग एंड सिविल वर्क 12, लेट मी पुट 12. प्लांट एंड मशीनरी, लेट मी पुट 15. मिसलेनियस फिक्स एसेट्स 2 crores. Margin money for working capital, we speak sometime now. Contingency from contingency table and pre-operative expenses is 1.5 CR. Means of finance उन्होंने बोला है टर्म लोन, तो मैंने पहले से सेट करके रखा है कि प्लांट एंड मशीनरी, मिसलेनियस फिक्स एसेट एंड कंटिजेंसी का 75% और लैंड एंड बिल्डिंग का 60%. तो फॉर्मूला देने के बाद पेयर हुआ टर्म लोन फिगर इज 23.68 and 7 crore is my quasi capital and balance is by your share. Now table 3 is contingency table. See what promoter has said, contingency will be 5%. Here in demi data it has taken 3%. Let me change it to 5%. Now contingency is 0.98. We see automatically everything will get changed. This is 5, 5 and 5. Now see contingency become 1.63. So automatically in project cost and provision for contingency become 1.63. I have made it bold and color in gray. So this is my provision for contingency work. See, project cost got automatically changed. See, means of finance, then means of finance are got automatically changed. There is no difference between cost of project and means of finance because this sheet is made so dynamic कि कहीं भी कुछ चेंज हो जाएगा ऑटोमेटिकली सब जगह चेंज हो जाना चाहिए. Now there are 2-3 important things in first step. One, why should be quasi? Reason for putting some contribution of promoters contribution by your quasi equity is that if you don't put quasi equity, if you put entire say private limited company is putting up a project and entire contribution is by your share. Now that project has performed well. Say you have projected first year you earn 2 crore, but the project has gone off well and you have earned 3 or 4. Generally, if you are earning well, probably you need to expand. You will expand because your business is doing well. Now, see, you have projected 2 crores of profit, actually done 3 crores. You want to 1 crore, whatever excess amount you have invested, you want that this amount coupled with additional term loan, you want to invest, maybe expand some of your things. So you have to withdraw this 1 crore from the business. So what are the ways to withdraw? One, you can increase your director's remuneration. Was second, probably maybe you can give declaring dividend. Obviously, जब term loan लेते हैं तो बैंक का एक condition रहता है till the duration of term loan you cannot withdraw by your or you cannot declare. So certain times banker clause will be there, sanction clause. So it may not be possible to give back or get back money by your fee. Even if had possible, then also either dividend or director's remuneration, both are taxable income at the hands of recipient, at the hands of your client or promoter of the company. So why you are investing your tax saved, tax paid money in a business or in a project, and while withdrawing again, you have to pay tax if it is by your director's remuneration or by your dividend. Instead of that, if you put some money by your quasi equity, then while withdrawing for say expansion or additional unit, you don't have to pay tax again. This can form again margin money or your contribution, promoter's contribution for expansion. So that's why I suggest कि quasi equity रखना चाहिए ताकि कुछ पैसा अगर withdraw करना पड़े बिजनेस अच्छा चले तो हमको वापस टैक्स भरने की जरूरत. Now, another important aspect is tax plan. See, every family of us, there may be non-active earning income tax filing, like HUF, maybe senior uh, female member of our family who are generally earning, if they are non-active in business or something else, then they are probably earning by way of interest or maybe some share transaction, bank interest on bank FD or interest given on loan and something else. Instead of giving it to outside, why don't you extend this loan in your own business house? Suppose you have taken, there are 4 non-active earning member in your family, and you have taken 50 lakhs each from them. So you have put it, say, 2 crores of rupees by your unsecured loan or quasi equity in your business, and you have decided to pay them 12% interest. Now, 2 crores, 12% interest means you are giving 24 lakh interest to 4 members of your family, those assuming that they don't have any other such income source. Now, 24 lakh interest is legitimate expense in your company because you are paying interest to them and interest on unsecured loan is a legitimate expense. So you are saving, say, if you are 25% tax bracket, you are saving around, say, 6 lakhs by way of tax on those interest expenses booked in your project. And on the other side, this 24 lakh getting distributed to your 4 of family members, they are getting 6 lakhs income, and probably they do not need to pay any income tax because of say TC exemption and all those things. So आज के दिन तो 7-8 लाख का income तक तो if you do proper tax planning, then you don't have to pay tax. तो एक side में आप कंपनी में tax बचा रहे हो because of interest expenses. Other side, you are getting income, but don't require to pay any tax on those income because that income is below your taxable. So it's a double benefit. That's why I suggest some contributions should come by way of unsecured loan from family friends in case of private limited companies, shareholder directors. तो आपके दोनों बेनिफिट हो जाएंगे। एक तरह से प्रोजेक्ट में टैक्स का बचत होगी, दूसरी साइड में जिस फायदों में वो इनकम आ रही है प्रोबेबली मे नॉट नीड टू पे इन एनी इनकम टैक्स ऑन दैट। नाउ देयर मे बी क्वेश्चन कि whether this should be treated as equity or debt. Most of the time, bank will treat as equity, not as debt, to work out various ratios. Only thing bank may ask कि boss, these unsecured loans will be subordinated to my bank debt. तो बैंक ने जो लोन दिया उसके सबऑर्डिनेशन में ये अनसिक्योर्ड लोन रहेगा। इसका मतलब क्या हुआ कि जब तक बैंक लोन रिपेमेंट नहीं होता है, यू कैन नॉट पे ऑफ दिस unsecured loan. That clause may they insert, but they will treat you 90% of the time. They will treat you. Most of the banks treat it as part of equity. That's why unsecured loan. I suggest, I advise, while you are preparing any project financials for any project report for your client, you put some amount by unsecured loan or quasi equity. Second important aspect, I have taken provision for contingency. This you must put because you don't know. See, most of the time, bank will put a clause. Any overrun to the project cost will be borne by promoters. And खुदा ना खास्ता कभी कोई project cost बढ़ गया, if there is some increment to project cost and if there is some contingency provision in your project report, they will consider that. So you can safeguard your client from any contingency arising in the project. See, आपने 20 करोड़ का प्रोजेक्ट है और आपने 2 करोड़ का कंटिजेंसी प्रोविजन ले रखा, तो प्रोजेक्ट अगर 22 करोड़ तक भी कभी चला गया, तो स्टिल बैंक विल प्रोपोर्शनेटली डिसबर्स टर्म लोन बेस्ड ऑन देयर व्हाटएवर सैंक्शन टर्म देयर। बट आपने कंटिजेंसी लिया नहीं और 20 करोड़ का प्रोजेक्ट अगर 22 करोड़ चला गया, तो बैंक विल आस्क प्रोमोटर्स टू पुट एडिशनल 2 करोड़ बाय देयर इक्विटी और अनसिक्योर्ड और क्वासी इक्विटी। तो बाय keeping provision for contingency, you are safeguarding your clients. In case of any contingency arise, then you have made some provision. So your client is safeguarded to that extent. Provision for contingency. जितना amount का contingency provision है, your client get safeguarded for that. तो इसलिए हर प्रोजेक्ट में contingency can be different. Sometimes it may be 2%, sometimes it may be 3%, 5% or 7%, depending on cost structure of your project. Suppose if you are dealing with some kind of say imported materials, maybe imported machinery or something like that, then there is a foreign exchange and all those things are there contingency. So there may be chance of incremental project cost. So you can safeguard your clients. Second thing you have to understand. See, project you have say project is 20 crore and 2 crore is contingency, 22 crore. If you complete your project, say less than 20, 19, तो बैंक will not punish you. Bank will say, boss, okay, 20 के जगह 22 के जगह 18 हो गया, हमने डिसाइड किया था 75% आपको देना है, तो बैंक will disburse proportionally. But in case of incremental cost, bank will not disburse proportionally. If you have submitted project report with say only 20 crores instead of 22 crores, and it becomes 21 crore because of some revised or because of some escalation in cost, तो वो 1 crore बैंक will ask, you have to ask your promoter, or bank will ask the promoters to put from his own pocket, from their own pocket. That's why provision for contingency should be there. Third important aspect in first level is working capital margin. Generally, nationalized bank tells that should not be part of project cost. But I suggest this must be part of project cost. Because what happens from my own experience, I am telling you, long back, decades back, I prepared a project for one of my clients came to me. See, I have got this project, cost is around 20 crores. I have there 10 crores with me. Why don't you prepare a project report? Ask 10 crore of term loan from the bank. I have prepared the project report. I have asked 10 crore, bank has sanctioned it. Project got implemented. And along with term loan, bank also sanctioned 20 crores of CC limit for my working capital limits. What happens? The project got completed on time. Then we need to source material, and we need to source material worth 6 crores. When we went to bank, he was हमको 6 करोड़ को ट्रायल रन और प्रोडक्शन स्टार्ट करने के लिए we need to source raw material. You disburse as 6 crores because you have already sanctioned me 20 crores. Bank obviously will tell, yeah, I will not disburse 6 crore. Your requirement is 6 crore. Our funding clause is that we will fund 75% of your net current asset by way of working capital, maybe CC or so rest out of say 6 crore, then he will, bank will ask कि भाई आप 1.5 crores आपने इसमें डालो proportionately and 4.5 crore bank will fund to get this 6 crores worth of matter. These are practically happened to me. Then my client asked कि भाई जितना पैसा मेरे पास था तो सब कुछ मैंने प्रोजेक्ट में डाल दिया है, अब मैं पैसा कहाँ से लाऊं? So you should not face this kind of question. So, and if you put this working capital margin as a part of project cost, then you are making aware your client कि जब trial run start होगा, तो promoter has to invest this much amount from margin money to avail working capital facility. Hope you are getting my. तो इसलिए वर्किंग कैपिटल मार्जिन मनी बैंक मना भी करे, आप उनको बैंक को समझाना पड़ता है कि बॉस, आई एम नॉट आस्किंग टू फंड दिस, I am not asking double fund, but keeping this money as working capital margin in cost of project to keep my client aware of why when they start after completion of project, when they start trial run, when they start sourcing material and all, and he has to invest this much amount to disburse his entire working capital facility. By this, I have completed step 1. Let me see what is my step 2. Step 2 is complete the production and sales statement. You arrived at sales figure, which will go working result sheet. See, these tables are prescribed by institution. There is no expertise of mine to prepare this table. ये institution ने अपने को provide किया. These are the tables you need to prepare. My expertise gone to make it a dynamic Excel sheet so that everything got linked and you can prepare everything in shortest possible time. So next step is prepare production and sales statement. I have kept this table ready. Let me go to my production and sales statement table. This is my table. Let's see Mr. Khandelwal what kind of data he has given. खंडेलवाल has given कि भाई A की कैपेसिटी मंथली 1.5 लाख लीटर है, B की कैपेसिटी 2 लाख लीटर है, कैपेसिटी यूटिलाइजेशन 60, 70, 80% है, and selling price A का 500 and B का 600. Based on this input, we can complete this production. See, 1.5 lakh liters means 18 lakh liter per month and 2 lakhs means 24 lakh liter your installed capacity. I have kept that and I have kept capacity utilization here said you have 50% है, 55% है, उन्होंने बोला 60, 70, 80. तो देखिए मैंने यहाँ चेंज करूंगा ऑटोमेटिकली एवरीवेयर थिंग्स विल चेंज. तो once you know install capacity, once you know capacity utilization, simple install capacity multiplied by capacity utilization, you will get estimated annual production. If you multiplied by estimated annual production by sales price, you will get estimated sales. Exactly I have done. Annual product install capacity, capacity utilization, I got annual production multiplied by selling price, I got sales figure, and by that I arrived at estimated sales for. And this estimated sales figure will go to working result sheets. I have kept it side by side because in Excel you have a facility. You can delete any cells. Earlier we used to work on loader where you can delete either row or column. तो इस तरह का हॉरिजॉन्टली प्रोजेक्ट रिपोर्ट नहीं बना पाते थे. बट एक्सेल में ये फैसिलिटी है तो वी हैव टेक एडवांटेज ऑफ दैट. वहां जो सेल्स फिगर बना है प्रोडक्शन सेल्स स्टेटमेंट, इट हैज कम टू दिस प्लेस. देखिए वही फिगर यहाँ ऑटोमेटिकली आ गया है. दिस लेट मी मेक इट ग्रीन. तो ये सेल्स फिगर यहाँ आ गया. स्टेप 2 कंप्लीट. लेट मी सी व्हाट इज माय स्टेप 3. Step 3 is complete the cost of production. Cost of production means you have to complete your direct overhead. Earlier days what we call it manufacturing account. Say proprietorship business हम manufacturing account और profit and loss account बनाते. This is nothing but manufacturing cost. So cost of production is all related to direct overhead. Let me go to Excel sheet again. एंड एक टेबल मैंने ये भी बना रखा है, एस्टिमेटेड कॉस्ट ऑफ प्रोडक्शन। देखिए मेरा सीट इतना डायनामिक है, वहां कैपेसिटी यूटिलाइजेशन चेंज किया 55, 65, 70 से 60, 70, 80, ऑटोमेटिकली दिस percentage also got changed in my cost of production sheet. Now see Mr. Khandelwal, what kind of data they have given me. Direct overhead, he has given रॉ मटेरियल ए के लिए 350, बी के लिए 450, स्टोर स्क्वायर दोनों के लिए 50, पैकिंग मटेरियल दोनों के लिए 10, पावर फ्यूल वाटर 10 lakhs per month first year, then 10% increment, labor cost 50 labor 10,000 per month and hike 10% year on year, supervisor 5, 30,000 per month, insurance and taxes on project on plant and machinery or factory is 0.5% of project cost, and other direct factory overheads is first year 7 lakhs per month, second year 8 lakhs per month, and third year 9 lakhs per month. Let me complete the production sheet. See, you know the annual production of A, you know the annual production of B. I have baked a formula. I have picked up annual production of A multiplied by 350, picked up annual production of B multiplied by 450, divided by crores. I got my estimated raw material cost for first year, second year, and third. स्टोर स्क्वायर आई हैव क्लब बोथ ए एंड बी बिकॉज दोनों के लिए 50 है, तो ए का एनुअल प्रोडक्शन, बी का एनुअल प्रोडक्शन दोनों को क्लब किया, 50 से मल्टीप्लाई किया, तो आई गॉट एस्टिमेटेड स्टोर स्क्वायर्स एंड कंज्यूमेबल्स. थर्ड इज पैकिंग मटेरियल, अगेन आई हैव क्लब्ड एनुअल प्रोडक्शन ऑफ ए एंड बी मल्टीप्लाइड बाय 10 divided by crore. I got estimated packing material cost. Then power, fuel, water. My promoter has said कि first year 10 lakhs per month लगेगा, तो 1.2 crores, and then I have given 10% increase. You have to ascertain whatever assumption you are taking, you have your workings ready, so that if you are syndicating also, you can go and explain your bankers कि भाई how you arrived at all those costs. See, certain times power, fuel, water may be key component. Then you need to have a working how you arrived at your power, fuel. Just arbitrary, any figure will not do. Suppose if you are implementing a cold storage project where power may be a key cost. So what you have to do? You have to keep a separate working where you will explain what will be my connecting load, what will be my peak demand, what will be my unit consumption, what is the unit rate, and how you have arrived at certain things. तो जो भी आप वर्किंग दे रहे हैं उसके एजम्पशन आपके पास रेडी होना चाहिए, ताकि आप अगर सिंडिकेशन भी कर रहे हैं तो यू कैन गो एंड एक्सप्लेन योर बैंकर्स कि हाउ यू अराइव ऑल दोज कॉस्ट. तो हमने पावर, फ्यूल, वाटर ये लिया था. देन लेबर ओवरहेड सिंपल 50, 10,000 into 13 months including bonus. Then you have given 10% in factory staff 5, 30,000 into 30, then you have given 10% in. And insurance and taxes 0.5% of your project cost, it becomes 9 lakhs. And I have kept 3 years almost concerned, because what happens generally insurance and taxes figure doesn't change year on. कभी कभार तो कम ही होता है, ज्यादा नहीं होता है. So I have kept it same amount for all 3 years. And other factory overheads, my client promoter has given first year 7 lakhs per month, second year 8 lakhs per month, and third year 9 lakhs per month. By this, I have completed my estimated cost of production. It is nothing but all direct. And once I have cost calculated, then I have taken in my what I call working results, because this nomenclature is given by institution. This is nothing but profit and loss. Estimated profit and loss. हमारे पास cost of production आ गया. See what is my next step. Next step is complete the working result till sales. तो अपन उसको complete करते हैं. Let me go to my word file where indirect overhead का details हमारे promoter ने दिया है. Salary 5 lakhs per month, 10% increment year on year. This is office staff salary. Director remuneration 4 lakhs per month, 10% increment year on year. Telephone, stationery, staff welfare, office electricity, miscellaneous indirect overhead. Administrative overhead is 3 lakhs per month, then 10% increment. And selling and distribution, my promoter has said it will be 5% of sales. तो हम सेल्स तक का फिगर एक्सेल में वर्क. Salary 5 lakhs per month, 60 lakhs. Then I have given 10% increment. Director's remuneration 4 lakhs per month. Then I have given 10% increment. Telephone, office supplies, office electricity, all those indirect overhead, administrative overhead, 3 lakhs per month. Then I have given 10% increment. Selling and distribution, my promoter has said it will be 5% of sales. तो sales figure यहाँ है, इस पे multiply कर दिया 5% से, तो I got my total cost of sales, sales figure आ गया, और sales minus total cost of sales is my operating profit. तो ये step भी complete हो गया. Let me see my next. Now think complete the term loan chart. You arrive at interest and return. तो एक term loan chart अपन बना लेंगे Excel sheet में. यहाँ मैंने टर्म लोन चार्ट क्वार्टरली के हिसाब से बनाया. रीपेमेंट शेड्यूल इज 1 + 6 years, whichever promoter has given me the data. Now सी टर्म लोन का फिगर कहाँ से आएगा? दिस विल कम फ्रॉम मीन्स ऑफ फाइनेंस. तो ऑटोमेटिकली अगर कोई चीज चेंज होता है, प्रोजेक्ट कॉस्ट, मीन्स ऑफ फाइनेंस, कुछ भी चेंज होता है, तो ऑटोमेटिकली ये टर्म लोन चार्ट ऑटोमेटिकली चेंज हो जाएगा. तो यहाँ हमने प्रिंसिपल अमाउंट मीन्स ऑफ फाइनेंस से व्हाट इज द टर्म लोन आस्किंग, वो डायरेक्टली पिक अप कर लिया. फर्स्ट ईयर देयर इज नो रिपेमेंट. Second year onwards, instead of 20, it has to be 24 because we have taken 1 + 6 years and 6 मतलब 24 quarters equal. ये 24 कर दिया तो you got your quarterly principal EMI figure, and you have to see कि whether 7th year it automatically becomes 0, means term loan chart is perfectly organized. 1 + 6 years repayment, 7th year it automatically becomes 0. तो आपने ये स्टेप भी कंप्लीट कर दिया टर्म लोन चार्ट. Certain times you may require to prepare monthly repayment schedule. Today there are n number of Excel sheet available. Basic purpose of this chart, you need to know what is my yearly outgo by your interest and by your principal. तो इवन मंथली रिपेमेंट होगा तो मंथली टेबल भी बना सकते हैं. देयर आर n नंबर ऑफ एक्सेल ready sheet is available where you put your principal amount, you put rate of interest, your repayment schedule. They will give you annualized interest payment and annual repayment, year-wise interest and repayment principal. And you can insert those sheet in your project cost, project report, this kind of project financials. Even if it is monthly, there is no problem. I have, for calculation, easier calculation sake, I have taken it quarter, but monthly is also possible. For chartered accountant like us, it is not. तो देखिए हमारे पास एनुअल इंटरेस्ट पेमेंट आ गया है. ईयर वाइज 25-26 में क्या है, 26-27 में क्या है, व्हाट इज माय इंटरेस्ट आउटगो एंड प्रिंसिपल आउट. दिस इंटरेस्ट चार्ट विल गो टू वर्किंग रिजल्ट्स, प्रॉफिट ऑन लॉस अकाउंट एंड इंटरेस्ट ऑन टर्म. तो मेरा ये स्टेप भी कंप्लीट हो गया. लेट्स सी व्हाट इज माय नेक्स्ट स्टेप. नेक्स्ट स्टेप इज नाउ दे आर सेइंग कि भाई कॉस्ट ऑफ प्रोजेक्ट में जो मार्जिन मनी फॉर वर्किंग कैपिटल का कॉस्ट बचा हुआ था, नाउ यू कंप्लीट दिस स्टेप 6. यू हैव टू अराइव दैट मार्जिन मनी फॉर वर्किंग कैपिटल. So I have prepared one table. These are standard table given by institution only. तो यहाँ मैं आपको दिखा देता हूँ how you can arrive. Margin, you know, in CC or working capital facility, most of the time you have a 25% margin, means 25% of net current asset has to be brought in by promoters. तो हमने margin money 25% सब जगह कर दिया है. And let me see my working capital side. Promoter must have given me data. Let's see working capital. Raw material 1 month, stock of finished good half, working capital 1/4 month, means 1 week times, debtors 2 month and creditors 1 month. तो यहाँ मैं चेंज कर देता हूँ. रॉ मटेरियल 1.5 महीना लिखा हुआ है, 1 कर दिया. ऑटोमेटिकली सब टेबल चेंज हो जाएगा. स्टॉक ऑफ फिनिश्ड गुड 0.5 हाफ मंथ, 0.25 1/4 month, debtors 2 months and creditors 1 month. So now see, you know your entire raw material 12 entire raw material requirement from estimated cost of production divided by 12 multiplied by 1, so you know your estimated raw material holding. Stock of finished goods half, तो आपके पास cost of sales का figure है. Based on that, divided by 12 multiplied by this half, you know your average stock of finished goods what will be there. Similarly, finished goods sales ka divided by 12 multiplied by 2, since your assumption is that there will be 2 months outstanding, so you know what will be your total debtors figure, and you are getting credit of 1 month, so purchase divided by 12 into 1, तो आपका creditors का figure भी आ. तो ये total net current asset आ गया. Out of that 25% this is the margin money which you need to put, and rest will be funded by bank as working capital. So you arrived at 23.21 is your total current asset. Net current asset is 30.94. Out of that 23.21 will be funded by banks, and rest of the things has to be put in by promoters as margin money towards working capital. तो ये स्टेप भी कंप्लीट हो गया, and this margin money for working capital now already came to this cost of project. तो automatically cost of project change हो गया. Now you see it is so dynamic कि आपका means of finance भी automatically change. Now cost of project, means of finance, contingency table are complete in all respects. Let's see what is my next. Next is complete the interest working. See working results में हमने सेल्स तक का कर लिया था एंड ऑपरेटिंग प्रॉफिट तक का कर लिया था. अब रेस्ट ऑफ द थिंग्स वी हैव टू कंप्लीट. ये वर्किंग रिजल्ट्स में आ गया. यहाँ तक हमने कर लिया था ऑपरेटिंग प्रॉफिट. नाउ आई हैव टू टर्म लोन चार्ट से आई विल गेट ईयर वाइज इंटरेस्ट, तो इंटरेस्ट ऑन टर्म लोन हो गया. नाउ वर्किंग कैपिटल, मार्जिन मनी फॉर वर्किंग कैपिटल में आई नो what will be my sanctioned CC limit, estimated working capital limits, multiplied by interest rate, multiplied by average utilization. You as a chartered accountant or you as a businessman aware of कि अगर मेरे पास 20 करोड़ की CC limit है, that doesn't mean कि every time I will use full 20 crores. Average utilization will be maybe 70, 80 or 90%. Generally, bank also put a condition कि your average utilization will be 70%. at least minimum 70%. Generally experience says कि भाई जो आप estimate कर रहे हो उसका 80-90% तो use करते. So what I have done, estimated working capital limits multiplied by estimated average utilization 80% multiplied by interest rate, I got estimated working capital interest. First year, second year, third year. जनरली 3 साल का इंटरेस्ट का फिगर लगना चाहिए. उसके बाद आप कंस्टेंट रख सकते हो. आपको अगर बढ़ाना भी है तो आप बढ़ा सकते हो. एजम्पशन में लिख दो क्या है, assume that interest working capital limits will get enhanced maybe 5% every year or 10% every year. But generally in project financials, to keep it for, if you work out for 3 years, that is enough, because you also aware of the CC limits generally renewed every year. So bank is not so much focused what will be your interest rate, interest outgo by interest on CC on 4th year, 5th year, 6th year, because they know every year you have to renew and interest figure will get changed. But anyway, first 3 years you must provide. First 3 years के बाद मैंने constant रखा. So this portion is completed. Now what is my next step? Next step is depreciation as per Companies Act. See, time is short, so I am not going into working. You can always prepare depreciation chart. What is your cost of projects है, आपके assets के figure है, depreciation note, depreciation rate you know. If it is SLM, then every year depreciation will come same. And if it is WDV, then you have to work out WDV depreciation year after year. So I have already worked out. Table is there in this Excel sheet, which probably I will give it to moderator or CP committee, which in terms they can give it to you. Now, if you reduce interest and depreciation, you get profit before tax. You have a pre-operative expenses. You have written off for 5 years. Then you got profit before tax. I have to go little fast, otherwise timely completion is difficult. But I will try to cover most important points. कुशाल जी 5 मिनट एक्स्ट्रा लूंगा, चलेगा ना?
Yeah, no issues, sir.
profit before taxation, then you have to provide provision for tax. You can prepare a separate table. I have also prepared a table how to arrive at taxation figure. It is simple. Profit, total profit figure, less depreciation as per uh, Companies Act, add depreciation as per Companies Act, less depreciation as per Income Tax Act in case of private limited company, multiplied by tax rate will be your provision for taxes. Then profit after tax, there is no dividend because generally in term loan sanction, you are not allowed to declare dividend. Then you got a retained profit or net profit, add back depreciation, non-cash expenses, depreciation and preliminary expenses, you get net cash profit also. Then certain ratios you need to work out. Operating profit, net profit, operating profit divided by sales is operating profit ratio, net profit divided by sales, net profit ratio. There is certain characteristic of operating profit should travel in a narrow band. Here also you see 8.01 to 8.28. It cannot be too volatile, 8, 9, 10, वापस 7, इस तरह से नहीं होना चाहिए. That means there is some wrong assumption in your projection. And net profit ratio, estimated net profit ratio should be in incremental terms. कि भाई आपको धीरे 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 बढ़ता जाए. तो यहाँ भी 2.86 से start हुआ, is ending at 4.6. Interest coverage ratio is total interest liability cash profit divided by your total interest liability is interest coverage. Debt equity ratio need not to explain. Asset coverage ratio means your fixed asset divided by term loan figure. तो ये भी जनरली जैसे जैसे रिपेमेंट होते जाएगा आपका एसेट कवरेज रेशियो बढ़ते जाएगा. DSCR I will separately explain. So these are few ratios you need to give. Now you have to prepare cash flow statement. Cash flow statement easy. From means of finance, you will get share capital figure, term loan figure, quasi equity figure. From your working results, you will get profit before taxation with interest added back. Increase in bank borrowing, आपने margin money for working capital बनाया था, उसका आपको मिल जाएगा कितना CC limit आपका estimated CC limit है. Since it's a non-cash cash flow statement, तो आपको add back करना पड़ेगा depreciation and preliminary expenses return. Now outflow, cost of project से fixed cost आ गया, total fixed assets का. Margin money for working capital में you know what is your net current asset, that will be outgo. Cost of project से preliminary expenses मालूम पड़ जाएगा. Decrease in term loan from term loan chart. Interest on term loan because the profit with interest added back किया तो outflow में हमने interest on term loan, working capital loan ले लिया, taxes outgo ले लिया, dividend है नहीं, zero है. तो I got sources of fund, utilization of fund. So immediately I got year-end my cash. Now next step is you need to prepare balance sheet. I will explain that PPT sheet already all steps are given. Again, balance sheet is easy. Share capital will come from means of finance. Unsecured loan will come from means of finance. Reserve and surplus is nothing but retained profit. तो cumulative figure आ गया. Sources of fund में term loan chart से आ गया. Working capital loan, margin money for working capital से आ गया. Syndicators. See, in cash flow you have taken borrowing and net current asset one side and borrowing other side. Here you have to bifurcate. So margin money for working capital, you know what is your estimated syndicators. It was 1 month. So based on that, you have taken syndicators. Then fixed assets from cost of project, you know total investment, less depreciation, you will get net block. And then current asset, inventory, raw material, WIP and finished goods तीनों को जोड़ के हमने inventory figure ले लिया. Margin money for working capital में figure दिया हुआ है. Sundry debtors, margin money for working capital से आ गया. Cash flow से cash and bank balance आ गया. And preliminary expenses, intangible asset to the extent not written off. So preliminary expenses to the extent not written off यहाँ. So you got your balance sheet ready. Now two explain. One is debt service coverage ratio. Very important. Net cash profit, net cash accruals added with interest term loans, you get total of A, and repayment of loan and interest on term loan, you get total of B. A divided B equal to DSCR. And सातों साल का जब DSCR निकाल लिया तो average DSCR average into all those years. So you get average DSCR. DSCR is very important. Generally, bank accept 1.5 to 2. Less than 1.5 bank will not accept average. तो कभी कोई कारण से आपका अगर DSCR 1.5 से नीचे आ गया, बैंक बोलता नहीं I cannot sanction this kind of DSCR, तो you have two options. Easiest option is to increase the profit, but ये कभी नहीं करना है. What you have to do, either you increase your टर्म लोन ड्यूरेशन 1+6 के जगह आप 1.8 ले लीजिए, 1+9 ले लीजिए, बिकॉज टू मैचिंग विद DSCR, और अदरवाइज यू हैव टू गो टू promoters and ask them you may reduce your term loan contribution, increase your own contribution so that DSCR falls. And if it is more than bank expectation, suppose in this case it becomes 3, so what you do, then you reduce your profitability, you do your conservative estimate, don't reduce your duration of loan, better you reduce your uh, estimates, whatever projected profitability to conservative. See, if you project 8 crores and if you achieve 10 crores, bank will be happy. But if you project 10 crores and if you achieve 8 crores, internal rating will got affected, and during next year as well, they will have reduced rating. Obviously, your cost of funds will increase. So this small take care you must take in debt service coverage ratio. ये कैलकुलेशन ऑफ डेप्रिसिएशन एज पर इनकम टैक्स एक्ट बना के रखा है, बिकॉज टाइम इज शॉर्ट, इंटरेस्ट ऑलरेडी एक्सपेंड, इनकम टैक्स का भी टेबल बना के रखा है, you can calculate those. Then one important is break even point, which we have learned in costing subject in CA curriculum. Simple, sales minus variable cost equal to my contribution divided by sales. I got my PV ratio, and there is fixed expenses, administrative overhead, interest on term loan, depreciation, preliminary. Fixed expenses divided by PV ratio, you got break even point value. And if you fix expenses make non-cash expenses को हटा दो, तो you will get cash BEP value, and in terms of percentage, this value divided by sales become your percentage. 8.49 is break-even point sales, and your sales figure is 187. So break-even point sales divided by sales equal to your break-even point percent. What it signifies? It signifies that when you achieve 45.67% of your estimated projection then also your company will not incur any losses. This, if this is less than 50 or near to 50%, then bankers get comfortable कि भाई थोड़ा बहुत 19-20 अगर कुछ problem भी आए, so this unit will not incur any losses. See, even if it is 90%, banker will say, "Bhai, I will not fund this kind of very risky project where थोड़ा भी 19-20 हो गया तो your BEP become more than 100%. That means you will not able to service bank debt." And एक टेबल मेरे एंड से मैंने ऐड किया, that is called summary financial. This one pager note is important while submitting project report with bank. What happens? कि see, you are giving project entire project report, अगर 100 पेज का project report you are submitting with senior official, they are also too much busy, they cannot go through entire project. That's why what we do, we prepare a summary financial, then 2-pager, 3-pager executive summary. We go to senior personnel of banks. So this is the project, these are the promoters, these are project costs, and these will end into this kind of financial metrics. He will see 2-3 pages, and he will, if he fills with the policy permission of the bank, he will ask his loan officer कि भाई असावा ने जो प्रोजेक्ट रिपोर्ट सबमिट किया उसको अप्रेज करके फटाफट काम फिनिश करो. Another advantage is that if you give entire project report, say 150 page project report, invariably your loan officer will ask कि भाई सर KYC document भी दे दो. And if you are say submitting this kind of project to 2, 3, 4 banks, everybody will ask for KYC, and they will log into your civil side. Then all other banks will come to know that you are traveling to many banks. Obviously, they will do more due diligence. So that's why it is needed कि भाई your summary financial 2 पेज का executive summary दे दिया तो bank can take a call. Once bank said yes, this kind of project we can do, you can submit your entire project. Another advantage, acha, this way I came into of my presentation, but I will show how dynamic is the Excel sheet which I have. Let's see, let me make 2 or 3 changes and explain you why my. See, let me go to my cost of projects and means of finance. Here I have taken say 60% of land and let me make it is all 75 because 75% is allowed. तो आपका टर्म लोन फिगर बढ़ गया. देखिए कॉस्ट ऑफ प्रोजेक्ट वही है, मींस ऑफ फाइनेंस ऑटोमेटिकली टैलीड है. अगर टर्म लोन फिगर बढ़ गया तो टर्म लोन चार्ट में रिपेमेंट इफेक्ट होगा, DSCR इफेक्ट होगा. DSCR कम आएगा. लेट्स सी DSCR कम आया कि नहीं आया. Let me go to DSCR stated again. Average DSCR become 1.85. Earlier it was coming more than. So अपना cash flow, repayment, everything will get affected, and everything is properly get affected or done in the Excel sheet. Then your balance sheet will become tally. Let me see whether balance sheet is tallied or not. If I am claiming it is dynamic sheet, the balance sheet must be tallied. Here you see my balance sheet is tallied. There is no difference. 0 beta 0. Now another change let me make, say capacity utilization. Let me change it to say 65, 75 and 85. So my everything got affected. Working results, sales will more, profitability will more. Obviously, cash profit will be more. So my DSCR should get improved and everything should get changed. Margin money for working capital will change. If everything, all changes happens in sync, then my balance sheet will be tallied. Let's see whether balance sheet is again tallied or not. Yes, balance sheet is tallied. That's why whatever I have claimed is proven right. This sheet is very dynamic. कहीं भी कुछ भी change करो, multiple changes you can do, and this balance sheet will automatically tally. If you've done anything error, then the matter is different. Otherwise, if you have done it properly, then obviously your balance sheet must be tallied. The everything has been linked with meticulously with all formulas. कि कहीं भी आप कुछ चेंज करें, आपने दो चेंज करके देख लिए, any changes you make, even selling price, purchase price, raw material price, cost, capacity utilization, even you can change say margin very certain times. Cooperative bank says in a boss working capital margin will be 30%. So obviously your margin requirement will increase. Let me do this also. Let me make it 30%, all 30%. All 30% means margin will increase, my cost of project will change, means of finance will change, and see कि इतना सब कुछ करने के बाद भी बैलेंस शीट टैली है कि नहीं. Let me go to my balance sheet. Okay, projected balance sheet, and end of the date I have given a formula. I could have kept in watch window, but intentionally I have kept it there. Again, see the balance sheet is that. Third important aspect is that this dynamic sheet is multi-purpose. You can even appraise your, see, nowadays young generation is not coming to your domain of practice. They may want to become entrepreneur, they want to set up some project. You can appraise as a CA. If you are aware of this kind of sheet, you can appraise. See, consultant will tell you these are rough figures. They will give ये sales होगा, ये cost होगा, this is the profit, and this is excellent project. But you can appraise those projects, putting all those numbers, working out depreciation, everything. Even if you don't require term loan, put term loan figure, or you charge interest on your unsecured loan, or even if you your capital, you charge interest, and see. If see, as a businessman, you must work out interest on your capital also for appraising the. And then if you see if this project is viable or not, so you can guide your younger generation or family members or friends whether to go this kind of project or. समझ लो जो कंसल्टेंट ने दिया आपने टेबल पे डाला, मालूम पड़ा DSCR is coming say 1.2 or B is coming say 90%. Obviously, you will ask your friend or family members not to venture into this kind of risky project. So this way, I am ending my session. Let me go to my presentation part. Is there any step pending? Depreciation and per income tax act, then income tax working, then cash flow, then balance sheet, then your DSCR, and you are good to go. I have quoted my mobile number in the presentation. It is 9820403876. Very easy to remember. 20 40 38 76. 98 के बाद 20, then double 40, then 38, again double 76. So easy way to remember. And if you follow my advice earlier, I have given a disclaimer that if any loss or damages happens to you or your practice, I am not responsible. But now I am giving you guarantee कि if you follow my advice, if you enter in this kind of domain, your gross and net income will double. That's why I'm ending my session. Over to Kushalji.
Thank you so much, sir. Sir, we have one question, sir. Instead of unsecured loan, are preference shares a better quasi equity alternative to help fund expansion and cost overruns?
See, preference share, if it is convertible to equity share, then it's a better convertible to equity share, then bank will accept. Otherwise, redeemable preference share, bank will treat as part of debt, not part of equity, number one. Second, suppose your client is a partnership firm. There is no concept of preference share. तो better है आप unsecured loan, quasi equity दिखाओ और वही लो. Even in case of private limited companies or limited companies, or even in case of any other structure like partnership firm or cooperative firm, you can show one partnership firm unsecured loan from friends and relatives. Perfectly allowed. Bank will ask, you have to subordinate these unsecured loan to my loan. That's enough. They will treat that equity. But ये है कि कितना portion ला सकते हैं? Obviously, your entire contribution cannot come by your quasi equity. Some portion, obviously, bank will have. Most of the banks allow. देख लीजिए थोड़ा सा 10 मिनट एक्सटेंड हो गया. आई एम एक्सट्रीमली सॉरी, but if there is any question, I am ready to answer.
Yes, that's all, sir. Questions for today. So, on behalf of CP Committee of ICAI, heartfelt gratitude to CA Shiv Bhagwan Asawa, sir, for enlightening us with his knowledge on financial projection and also guiding us in step-by-step preparation of project report. Once again, thank you so much, sir. And lastly, to our participants, thank you for your attentive presence and participation. So our today's seminar is concluded. Thank you once again.
Thank you.
Thank you, sir.